Welcome to AI World TV, your go-to destination for everything artificial intelligence. Discover the captivating landscape of AI, where advanced technology finds real-life application. Subscribe to AI World TV for webzine articles, reports, podcasts, videos, live events, and latest trends. Hear from top industry leaders and discover how AI is transforming industries and our daily lives.
Okay, let's just dive right in. It is February 18th, 2026. And, if you've been watching the financial tickers this morning, or frankly, just trying to get your hands on a high-end GPU, you know that the ground is shifting under our feet.
It really is.
And
We're not just looking at a trend anymore.
no, we are looking at a full-blown divergence.
That is the perfect word for it.
Yeah.
A divergence. It feels like the global economy is, splitting into two distinct timelines right now.
We are diving into a massive new report from the AI World Journal today. It's called the AI Productivity Supercycle. And I have to be honest, usually when I read these big macro reports, my eyes sort of glaze over
Think you'd be a bit dry?
a bit. But this one, it started with a number that just smacked me in the face, $650 billion.
It's a staggering figure.
I mean, it's the GDP of a decent-sized country. But the wild part isn't just the amount, it's where it's going. For the last 20 years, tech investment meant, apps, social media, ad tech, software in the cloud.
Right. Asset light.
Exactly. But this $650 billion, it's not going into code. It's going into heavy industry. We're talking steel, concrete, copper, and silicon.
And that is the absolute core of the shift. We're seeing this U-turn back to the physical world.
Right.
For so long, the idea was software eats the world.
Right.
But what this report makes crystal clear is that the next phase of AI, well, the bottleneck isn't code anymore. The bottleneck is physics.
Physics, I love that. So we've hit the limit of what clever programming can do, and now we actually have to, build stuff.
You have to build stuff. We can write the code for these incredible AI models, GPT-6, Gemini Ultra, whatever's next, but we physically cannot run them without a completely new industrial base.
Yeah.
That money is funding what the report calls the infrastructure arms race.
And that race is what's fueling this productivity supercycle. So let's talk about that term, because for the last decade, economists have been sort of scratching their heads, haven't they?
The famous productivity paradox.
Yeah, we got iPhones, we got Slack, we got Zoom. We felt busier than ever. But the data showed we weren't actually getting more productive.
Not at all. Global productivity growth was stuck. It was flat at around 1.4%. We were communicating faster, sure, doom scrolling more efficiently. But we weren't actually creating more value per hour of work.
Just spinning our wheels faster.
Precisely. And the argument here is that 2026 is the year the wheels finally catch traction.
So what's a projection?
The AI World Journal is forecasting that this combo of massive physical infrastructure and what they call agentic AI is pushing productivity growth to 2.7% immediately.
Okay, that's already double.
It is. And the long-term gains, they're looking at maybe 5%.
5%. I want to pause on that because it sounds small, like a rounding error. But in economic terms, 5% compounding year over year is...
It's world-altering. I mean, that's post-World War II reconstruction level growth. It's the internet boom, but maybe even bigger, because it touches the physical means of production, not just information.
So to understand how we get to this promised land of 5% growth, we need to break this down. The report gives us three main acts. First, this infrastructure arms race.
That's $650 billion.
Then the reckoning that's happening in traditional software. And third, the rise of agentic AI, which is the real engine driving all this.
That's the roadmap. And it all starts with the hardware.
Act 1, the heavy metal.
Yeah.
So you said physics is the bottleneck. Where specifically is all this cash going? I'm assuming it's not just for more laptops.
No. This is a capital flight into four very specific, very physical areas. The first one is hyperscale data centers. But I want to be really clear about the nuance here.
It's not just about building more of them?
No, not at all. It's about density.
Yeah.
The server farms of 2020 were built to store your vacation photos or host a website. These new facilities are high-density compute clusters designed to train AI. They run incredibly hot.
So they need more power.
Vast amounts of power. We're seeing a massive shift to things like liquid cooling systems because air cooling just can't keep up.
Yeah.
These are industrial factories, not just storage lockers.
So the buildings themselves are changing. That's huge for construction for HVAC.
Absolutely. The second area is advanced semiconductors. We all know the big names like NVIDIA, but this is also about the custom silicon being built by the hyperscalers themselves.
Right.
They're trying to optimize every single millimeter of the chip just for AI workloads.
And then we get to the third area, which I think is the one people sleep on the most.
Energy systems. This is the big one, the
Mm.
ultimate constraint. You can't run a massive AI brain without massive power.
And the public grid can't handle it.
The public grid is not even close. So you're seeing tech companies becoming energy companies. They're investing in fusion startups, small modular nuclear reactors, geothermal. Because if you rely on the grid, you're dead in the water.
It is just wild to think that the limiting factor for superintelligence is literally whether we can boil enough water to spin a turbine.
It really is. It grounds the whole sci-fi aspect of this in very gritty reality. And the fourth area is edge computing.
This is about moving the processing power closer to the source.
Exactly. Latency. The speed of light is fast, but it's not infinite. If you have a robot in a factory in Ohio, it can't wait for a signal to travel to a data center in Virginia and back. It needs to think locally.
You know, the report uses this analogy I really liked. It compares this whole build-out to the construction of the national electric grid in the 20th century.
It's a perfect comparison.
It's foundational. It's not speculative.
That's the key difference between this and, say, the dot-com bubble or the crypto boom.
Yeah.
In those cases, people were building things hoping demand would show up. Today, the demand for GPU hours is outstripping supply by a factor of 10.
So investors aren't throwing money at a dream.
No, they're scrambling to build the pipes because the water is already overflowing. And this leads to what the report calls the capital rotation. Investors are dumping old software stocks to buy into concrete, copper, and energy.
They want to own the toll roads.
They want to own the toll roads.
Which brings us perfectly to Act 2. And honestly, this is the part of the report that felt, well, pretty brutal. The SaaS reckoning.
There's a very harsh assessment, yeah. If you're a CEO of a traditional software company, this report keeps you up at night.
So let's set the scene. For the last 15 years, the golden rule was buy SaaS, software as a service, Salesforce, Workday, HubSpot. Recurring revenue, high margins, you couldn't lose.
It was the darling of Wall Street.
And now this report is basically calling them the losers of this great divergence. Why?
Well, it comes down to what SaaS actually is. Traditional SaaS is a tool designed for a human to manipulate a database. You log in, you navigate a menu, you click a button.
It's a digital shovel, a very expensive subscription-based shovel.
That's a great way to put it. But we're moving into an economy run by agentic AI. And here's the thing about AI agents. They don't need a user interface. They don't need a pretty dashboard.
They just need the data.
They just need an API key. An AI agent managing my payroll doesn't need to log into a portal. It just communicates directly with the database. So all that money spent on user experience, it's suddenly waste. In fact, it's friction.
And the market is absolutely punishing them for it. The valuation compression numbers are startling. SaaS companies used to trade at, 15 times revenue?
An average of 15x, yeah. Now they're down to 8x.
That's a massive haircut. It's nearly half the value gone.
And it's because investors are asking a very simple question. Does your business model survive if there are no more seats?
The per-seat license, that's the killer, isn't it?
It's the whole model. Workday charges you based on how many employees you have. But if you replace 10 accountants with one AI agent, you don't need 10 licenses. You might not even need one. It creates this huge deflationary pressure on the industry.
Okay, so
You are listening to the AI World Podcast, your trusted source for the latest innovations, insights, and trends in artificial intelligence, blockchain, fintech, and decentralized technologies. Each episode features expert interviews, engaging discussions, and in-depth analysis of how AI transforms industries worldwide. Stay ahead of the curve with the latest articles and exclusive reports from the AI World Journal, covering everything from emerging technologies to industry breakthroughs. For more news, global events, and access to AI World Society circle gatherings, visit us at aiworld.tv. Don't forget to subscribe to stay informed, stay connected, and be part of the AI revolution with AI World Lounge. Thank you for listening.
the report lays out these 3 survival tests. Basically, if you're a software company and you can't answer yes to these, you're in trouble. Let's walk through them.
All right, number 1 is agent compatibility. Is your platform explicitly built for bots to talk to? Or are you still focused on humans? If you're blocking scrapers, if your API is clunky, you're walling yourself off from the new economy.
Okay, test number 2.
Data ownership. This is huge. Do you have proprietary data that the big models don't have access to? If all you do is summarize public info, ChatGPT does that for free. You need locked-away data, private supply chain data, internal financial.
Data the AI needs to pay you for.
Exactly. And test number 3 is real-world integration. Can your software actually move something? Can it control a robotic arm? Can it reroute a truck? If you're purely digital, you're easily disrupted. If you're connected to physical systems, you have a real moat.
The report calls this the plumbing concept, that traditional SaaS is just becoming the plumbing. It runs in the background. It's essential.
But it's not the star. And you don't pay a premium multiple for plumbing. You pay utility rates.
So, if SaaS is just the plumbing, what's replacing it? This takes us to Act 3, the new AI tech stack. And this is all centered on agentic AI. We've used that term, but let's really define it.
Okay, so the difference is agency. A chatbot is passive. Prompt response. You ask a question, it gives an answer. An agent has a loop. Perception, reasoning, and action. You give it a goal, not a prompt.
Give me an example.
Instead of asking, how do I book a flight? You tell an agent, book me a flight to London for next Tuesday, under $600, add it to my calendar, and file the expense report. The agent has to go out, search, decide, execute, and connect to other systems.
It closes the loop.
It closes the loop, and that requires a completely new software stack. The report identifies 4 key layers.
Okay, lay it on me. Layer 1.
Layer 1 is orchestration. Think of this as the decision engine, or the brain. This is the software that connects the raw AI models to your company's data.
So it's the glue that holds it all together.
It's the glue. And the report says this is currently the biggest bottleneck and the biggest opportunity in the entire industry. Whoever figures out the orchestration layer basically owns the operating system for the AI economy.
Layer 2.
Security. But not security as we used to think about it. This is a defense perimeter. We used to worry about keeping bad guys out. But now you have autonomous agents inside your perimeter accessing your most sensitive data.
So who watches the watchers?
Exactly. This is where companies like CrowdStrike come in. It's about identity verification for non-humans. How do you know that agent trying to wire $50,000 is your agent and not a spoof?
Okay, that makes sense. Layer 3.
Connectivity. The nervous system. This is companies like Cloudflare. Agents need speed. They need real-time data. They can't deal with lag. So you're seeing surging demand for that low-latency plumbing.
And finally, Layer 4.
Data infrastructure, the foundation. And this isn't just storage, it's governance. In the old days, if your data was messy, it was just annoying for a human analyst. For an AI agent, messy data is catastrophic.
Garbage in, garbage out. But now, the garbage moves at the speed of light.
Precisely. And if you look at where the VC and M&A money is going, it follows this stack. Big tech is just hoovering up data platforms.
And private equity is, what was it, rolling up the distressed SaaS companies?
Yeah, this is fascinating and ruthless. They're buying the losers. We talked about the tanking SaaS companies. They strip out sales and marketing and just run the software as a low-cost utility. They're creating these zombie infrastructure providers.
Your stock is down. Great. I'll buy you, fire everyone, and turn you into a steady dividend check.
That is the market at work.
Okay, let's pivot to the human side of all this. We've talked about billions of dollars in software stacks. What about the people? Act 4. Workforce evolution.
It's a huge part of the report, and it paints a picture of a real divide. It forecasts slow job growth or even contraction for routine administrative roles, the admin layer that agents are good at.
So data entry, basic scheduling, the middlemen of information.
Right. But, and this is really important, demand is absolutely skyrocketing for AI engineering, for infrastructure management, and for data governance. The report explicitly says businesses face a talent shortage for these new roles.
So it's not that there are no jobs, it's that the jobs are different. The message is pretty clear, where you may reskill or you might get left behind.
That's the core message. The report warns of labor unrest if companies don't invest in bringing their workforce along. You can't just fire everyone and hire an API. You need humans who understand how the system actually works.
Let's get specific on sectors. The report gives a forecast for the next few years. Let's start with finance.
Finance is becoming an autonomous, high-frequency battleground. It's not just trading. Agents are handling compliance, risk analysis, even strategy.
Okay, what about healthcare? I'm hopeful for this one.
The report is very bullish here. The admin burden, all the typing, the insurance coding, it just consumes a doctor's time. Agents can take almost all of that over. The hope is that it actually makes healthcare more human. The doctor looks at you, not the screen.
That's the dream. Logistics.
Smart factories. Robotics are decoupling production from headcount, so you can increase output without necessarily hiring more people on the assembly line. It breaks that old link between labor and GDP.
And finally, media. as someone in this business, I have to ask.
Well, the supply of content is going to infinite. Generative video and audio are flooding the market. So the value shifts to curation and IP ownership.
Well,
It's not about who can make the video. It's about who has the trusted brand that tells you which video is worth watching.
so trust becomes the scarcest commodity.
Yeah.
I can live with that.
You're on the right track.
Before we wrap, we have to talk about the risks. Is this 5% productivity growth a guaranteed straight line up?
No, definitely not. The report highlights two huge hurdles. First, regulatory fragmentation. The world is splitting. The EU has different AI laws than the US, which are different from China's. If data can't flow across borders, the whole system just clogs up.
A splinter net.
The splinter net. And the second risk goes right back to physics. Energy constraints. We can't defy thermodynamics. If we can't bring new power generation online fast enough, and we're talking gigawatts, then the cost of compute goes up, and this whole growth engine stalls.
So we might build the smartest AI in the world, but if we can't afford to plug it in, it doesn't matter.
That is the paradox of 2026.
So let's bring it all home. The so what for everyone listening. If I'm a manager, an investor, just someone trying to figure out my career, what's the takeaway?
The report boils it all down to control. The winners of the next decade are the entities that control three things: proprietary data, orchestration logic, and physical infrastructure.
And if you don't own one of those three,
Then you're a user. And in this new economy, users pay rent. Owners are the ones who collect it. You have to position yourself or your company to be an owner of one of those levers.
that's a powerful way to frame it. It goes back to that plumbing analogy. Are you just building the pipes that carry the water? Or do you own the reservoir?
Or do you own the dam?
Exactly. And that is the question I want to leave you with today. We are standing at the edge of maybe the most significant efficiency transformation in modern history. The world is about to move a lot faster. That $650 billion bet has already been placed. The question is, which side of the divergence are you standing on?
That's the question to ask.
Thanks for diving deep with us. We'll see you on the next one.
The future of artificial intelligence is unfolding, and it's happening at AI World Week, the flagship global event for innovation, collaboration, and transformation. This flagship global AI event is designed to connect visionary leaders, trailblazing entrepreneurs, and influential thinkers to explore the endless possibilities of AI. Experience groundbreaking technology that redefines industries and inspires progress. Join thought-provoking discussions on ethical AI, digital equity, and the transformative role of technology in our world. Build meaningful connections that catalyze innovation and drive impact. AI World Week is powered by AI World Society, a global movement dedicated to advancing AI responsibly and ensuring it serves humanity. Together, we're shaping a smarter, more inclusive, and equitable future. Continue your journey beyond the event with the AI World Journal, offering expert insights, in-depth analysis, and the latest trends shaping the AI landscape. This is your opportunity to lead, to innovate, and to transform the world with AI. AI World Week. We invite you to join us and embrace the AI revolution.